Good evening, guys. This is JIDEX Academy, and I'm here to take you guys on principle and practice of double entry. Yeah, it is a topic under financial accounting. So what's principle of double entry? It states that for every debit entry, there must be a corresponding credit entry and vice versa. And also want you guys to know that this is the foundation of bookkeeping, and this is the topic that you have to pass through. You have to know very well before you can be a good account student or a good accountant. And many students fail due to lack of in-depth knowledge of principle and practice of double entry. So to summarize the principle, it says just debit the receiver and credit the giver. And I make you guys a deal clip to help you summarize it, but you should always know the principle for double entry. Deal clip, which simply means deal means you debit all expenses, assets and losses. So whenever you identify an account, identify whether it is an expense, asset or loss, so you debit it. And for the clip, you credit all liabilities, all income and profit or gains. So that's what makes it easier for you. And here is a quick exercise, because I'm going to make this video a short one. I don't really want to take most of your time this time around. Just quickly give you a brief understanding on principle and practice of double entry. So the first question says, requirement of the question says, state which account is to be debited and to be credited. Alright, so we are going to start with the first one. So let's give a solution. Is that started business with cash. So whenever you want to solve a double entry question, always identify the two accounts involved. The business account and the cash account are the accounts that are involved there. So let's write it down. That's the first step. You identify the account involved. So this business account represents the capital. Write your capital. And the other account is what? Your cash account. So the next thing you have to yourself is who is receiving and who is giving. So they say started business with cash. So the business is they are putting money into the business. So the business is paying cash. You get, therefore you credit your, so that's that about that, your capital. And the second question says took cash and paid it into bank. So the accounts here are what? Cash and bank. You write it, cash and bank account. So who is paying and who is receiving? He said took cash and paid it into bank. So bank is receiving, therefore you debit the receiver, which is bank, and you credit the giver, which is cash. So please pardon the noise, background noise. You just have to bear with us. Alright, hope you understand this, because you took cash and paid it into the bank. Therefore, like I said, you debit the receiver and credit the giver. So you credit cash and you debit bank. Hope you guys understand. And if you don't understand, ask a question in the comment section below. And we are moving next to question 3. This is question 3, and it says sold goods to credit to Ayodeji. Now, whenever you sold goods to credit whenever you sell good on credit or credit transaction is involved, the name of the person that is personal account will be involved, which is Ayodeji, and what? Sales. So the two accounts involved here are sales and Ayodeji. So you sold goods to Ayodeji. Ayodeji received the good, right? So therefore you'll be debiting Ayodeji, because Ayodeji is the receiver. You debit it. You debit the receiver, which is Ayodeji, and you credit what? You credit your cash, your sales rather. You credit your sales. You debit the Ayodeji and you credit sales, because that's the principle of double entry. You state you debit the receiver and credit the giver. Hope you grab. We move to question 4. Says return goods to lounge. We return goods to lounge. So whenever I see return goods, the preposition here matters a lot. So whenever I see to, that means it is return outward. We return goods to lounge. Therefore, return outward. the return outward and the account involved, and launch. So launch is receiving the goods, right? You debit him and you credit return outward. Hope you guys understand. Return goods to launch, return outward and launch account are the account involved. Therefore you debit launch because launch is the one receiving the goods return, and return outward is the one giving. So you credit, you debit. Bought motor van from Kende on credit. Bought motor van from Kende on credit. So it is a credit transaction, therefore a name will be attached. Therefore Kende is involved and motor van is involved. Therefore you write it down. Motor van and Kende. So who is receiving and who is giving? Even without asking yourself a question, from the summary that I gave you, deal clip, motor van is an asset, so it is automatically receiving. Debit and you credit Kende because you bought motor van. Kende is giving while motor van is receiving. You get, motor van is an asset, then Kende is what? A creditor, and creditor is what? Under liability. So we move to question 6. If you have any goods sold for cash, all right, sales account and cash account. So write it down. Cash account and sales account. So you sold goods for cash. Cash is receiving. You debit cash and you credit sales. Some people might ask why. If you notice in cash book, whenever you want to record sales of goods, it's usually on the debit side. So cash is receiving, and then the corresponding entry, which is sales, is on the credit side. Sales is an income, is a revenue, while cash is an asset. So I hope you guys are clear with that. And if you are not clear, you can still ask in the comment section below. This one says goods being paid, goods bought being paid by check immediately. So what are the accounts involved? Goods bought and check. So the check here represents what? Bank. And goods bought here represents what? Purchase. This is a purchase account, while check is represent bank account. Therefore who is receiving? Being paid by check. So check is giving, you credit it, then purchase is what? Receiving, you debit it. You debit purchase, you credit bank, because bank is giving and purchase is what? Seems to be receiving. Complex question, but I'm going to break it down for you guys. It says withdrawn goods for use. All right, if you notice in the trading profit and loss account, whenever goods are withdrawn, they will deduct it from purchase account. But in a situation whereby you don't have purchase account, you withdraw it from what? Stock account, also known as inventory or stock account. Then what? The other ones, this is drawings. Since you withdraw it, therefore the other account is in drawings. So since you withdraw goods, therefore your drawings is receiving and your inventory is what? Giving. Therefore you credit it, and you credit your inventory and you debit your drawings. If you have any question, I know most of you might have questions on this, always ask in the comment section below, and I'll gladly attend. So like I was saying earlier, if you have questions on that, always ask in the comment section below. Alright, this one says cash drawings. Of course, the two accounts involved have already been stated there, cash and drawings. So they say cash withdrawn. You can also say this is also known as cash withdrawn or cash drawings. They are saying the same thing. So you debit your drawings and you credit your cash, because cash is giving, drawings is receiving. It's for personal use. Alright, so kindly like and subscribe to my channel and share it with your friends, and comment in the comment section below. Thank you. See you guys in our next class.